My fellow investors, welcome back to the Newcomer Investor Channel, where we uncover the story behind great businesses. I'm your host, Anthony, and I'm very, very excited for today's episode. If you know me, you know I am a fan of KITS. I've talked about this company quite a bit, and I hold it in my portfolio. In fact, it's one of my larger positions. And today we are joined by a special guest from KITS. Big welcome to Olivia Evans. She is the Director of Corporate Development and Investor Relations at KITS. Olivia, it's an honor to have you. How are you doing today?
Great, thank you. No, thank you for having me on here today, Anthony.
Now, Olivia, to get us started, this is something I like to do with all of my guests at the beginning. If you could please give us an overview of yourself, your career journey, and ultimately what led you to your current role at KITS.
Of course. So I started my career back in Toronto working in valuations for an American bank. It took me a few years, but I actually moved out to Vancouver and transitioned over to Canaccord Genuity's wealth management arm. At that point, I was an investment advisor focused mostly on institutional clients, really public and private companies. It was a fantastic learning ground, and I got a great understanding of corporate growth and had the privilege of meeting some phenomenal management teams. But it was really during at my time at Canaccord that I became familiar with the KITS team. I'd actually been a customer of KITS, and I'd watched the evolution of the business from when Canaccord led the IPO back in 2021. And being a millennial myself, the story and value proposition just really resonated. And so when I saw the opportunity to join the team, it just felt like a natural fit.
Love it. The perfect person for this role, I can tell. Now, if you could please share in a few words, explain what is KITS and how do you make eye care easy?
Oh, a few words. Okay, let's see what we can do here. So, KITS is a leading D2C company focused on eyewear and contact lenses. We started out with a mission just to make eye care easy. And we do this by offering high quality, affordable eyewear that's delivered right to our doorstep. And so when our co-founders started the company just over 6 years ago now, back in 2018, they saw an opportunity in a $70 billion industry that was just burdened with inefficiencies, far too much waste, not enough technology, just a lot of complexity. So the core hypothesis really was that by automating processes and just eliminating those unnecessary costs, we could cut 90% of the waste out of the system and pass those savings along to customers, while also offering a broader selection to customers, about 10 times what you'd get from a brick and mortar store. And so as all of our glasses are actually designed and shipped here in from Vancouver, we can deliver these and ship them out the same day they're ordered.
Okay, wow. Can you walk us through how you are different then from traditional businesses in that optical category?
Well, so I see you're wearing your KITS glasses, but
I am.
like many people who go to a traditional brick and mortar store, it's a bit of a different process. And so if you're thinking of going down the street, going and seeing Bob at the brick and mortar store, inevitably what happens is a customer will go in, they'll choose a frame off the wall, and then that optometrist will box those up, ship them to a local lab, and that's really where they'll be cutting your prescription in. And so there's just a lot of inefficiencies within that. And so looking at our KITS platform, what ends up happening is a customer will take a photo of their prescription, try the virtual try-on process through our website. And so then that prescription will come through at our lab and everything will be automated and sent out within a day or two.
Love what you just said. You know what? You've actually described my experience, and I got to tell you this. So, as an investor, right, I like to everyone has a different personality type. I like to actually understand what I'm buying, in terms of the stock. I like to understand it by trying the product. So it was a few years ago, I decided, okay, I've invested in KITS. This is great, but I want to also see for myself because, as you've pointed out, I am wearing KITS glasses. I am a glasses person. So yeah, that experience you described about the traditional retailers of you go to the store, people take your eye measurements and then you go home and then you wait for weeks and then you're disappointed. I had that many times and that wasn't great. So I said, let me try out the KITS glasses. So I did. And I had seen at that point in time, it was a few years ago, there was some, advertising here and there, or people were saying, oh, this is what KITS does. But I thought, is it actually gonna be like this, or is it too good to be true? And turned out it was exactly as advertised. I got my glasses, it was my first time ever ordering them online. They got home on time within like a day. They were perfect, they fit, the prescription was great, and I was like, oh my God, this is insane. So that made me even more of a fan not just as an investor, but also as a customer. And that also helps build that conviction for, as an investor. So I'm saying this for anyone out there who's listening who, might want to be a customer or an investor. Just try out the service for yourself and you'll see how it is, right? But I think that's a good segue for next question I had for you, which is about customer loyalty. So as you know, right, this is a key for any retail business. So other than everything I just mentioned, how does KITS ensure that customers keep coming back, and how do you increase retention?
No, it's a great question, and I'm just happy to hear about your experience. And it's really one of the more important metrics that we focus on, being our Net Promoter Score or NPS, which reflects that customer satisfaction, as you were saying. And so internally, our goal of an NPS is about 80, which is among the highest in the industry. And for us, it's once you need vision correction, you need it for decades, often a lifetime. And so what we've seen is if you take great care of customers, they come back and come back again. And so even in our latest fully reported quarter, which was Q1 2025, we grew revenue by about 34% organically. But still, we had about 60% of our overall revenue coming from repeat customers. And so it almost acts as a software-like annuity stream. And this continues every quarter each year, even as we grow revenues, repeat customers account to about 60 to 65% of our revenue.
Wow. And when you think of if I compare this to, other businesses too, usually businesses trade at a premium when they have that incredible recurring revenue segment, right? Like over 60% is pretty massive. So love that. Continuing on that, I just want to ask about your biggest customer segment, which I believe are millennials. Can you share some thoughts on that specific cohort? What are their likes, dislikes, or habits?
Yeah, so the millennial cohort really is the customer of today for us and one of our biggest focuses. Millennials now are about 28 to 44 years old. And not only do they represent the biggest demographic in Canada and the US, but they also happen to be prime optical age. And so at this point, they're coming into contact lenses, early single vision, and even on the later early 40s are getting into some digital progressives. And so what this customer told us is that they just don't have patience for the status quo. As we were just saying, despite what their parents have done in the past, they have no interest in getting into a car or even an Uber and going to a brick and mortar store, picking from a small selection, paying $400, and then waiting 2, 3 weeks for a product that they want. And so, really, they set a very high bar. They want to press a button, order in 5 minutes from the comfort of their couch, and then get it in a day or two. For us, if you can meet this bar, you can really create a great experience for these customers and have them continue to come back. They will be the category for the next 10, 20 years, and then Gen Z will be right behind them. And so this is definitely our bullseye.
Okay, now we got to remember this is an investing podcast. I could talk all day, but I sometimes I could forget. But as an investing podcast, let's talk also a little more about financials. And firstly, starting with how do you manage to offer products at such competitive prices? Because this is the other piece I should have mentioned when I got my glasses. It wasn't the usual $500 that I spend when I go to a store. So how do you do it? How does that fit within your cost structure?
Well, it really comes down to the foundation. And so when we set out building kits, it was with the goal of removing the waste, as I mentioned earlier, and having that low cost infrastructure. And so as we're vertically integrated, we manufacture and ship every pair of glasses right ourselves right here in Vancouver. And so this just really eliminates a lot of the inefficiencies of those legacy brick and mortar stores. And so you think it's easy, right? You just find a category that everyone seems to have missed, make it easy for customers, and then grow into it profitably into eternity. But there's a reason why this category has just been so slow to evolve. To make any kind of difference in this category, you really need scale. And so there's just so many components to it. You're designing a product, manufacturing every product made to order. There's millions of different SKUs and categories like contact lenses. There's a fulfillment component, technology, marketing. There's just a lot of pieces to it. And so when looking at that scale, you really need it to be able to get any kind of leverage and make an impact for the customers. And so when we started, we had a bit of an unfair advantage in that the background of our CEO and co-founder, Roger, being his experience of building out coastal contacts. And he had over a decade of learnings in this optical category. And so when we set out to build kits, it was really doing it bigger and better this time and looking if we could find a straighter path. And so we found almost two secrets to this category. Secret number one is really to start with the smaller part of the category, which is contact lenses. It's about a quarter of the size of eyeglasses. Gross margin isn't quite as high as eyeglasses, but it's highly reoccurring. And it's also very profitable. And so these customers tend to skew a little bit younger. And really, it's the perfect customer that also, by the way, needs a pair of glasses. And so we started with contact lenses, built up that profit core, and then used that to launch into eyeglasses. And so when you do that, you focus on then number two, which is start with a lab. And that's really because all of the profit in eyeglasses is in the lenses themselves. If you bought eyeglasses in the past, I know it's no surprise to you, but when we're looking at the coatings, the blue light, anti-scratch, even digital progressives, that's really where the cost is for these customers and where the profit is for the category. And so if you're not manufacturing in your own lab, you're just passing that cost on to customers and really passing the profit on to whoever's using the lab. And so that's exactly what we did.
Wow. Okay. Lots to unpack there. The fact that you mentioned you basically reverse engineered the industry by starting with the contacts and then moving on to the glasses. If I recall, I think this is unusual, right? Most of the other players in general, right, they kind of do the other way around, and that's why it's hard to get their business off the ground sometimes. Am I correct?
It's yeah, exactly
Yeah,
that. It's a difficult process. I mean, if you're just even thinking about it logically, building a massive lab out before even selling a pair of glasses seems quite
counterintuitive.
counterintuitive, of
Yeah.
course. And so the team, just with the experience, really knew the industry well enough and had enough conviction in their beliefs to be able to launch the company. And now we're continuing on track for great growth rates ahead.
Perfect segue. Great growth rates. So you've had stunning revenue growth since starting Kits, now reaching, if I recall, it's over 180 million in annual revenue run rate, right? As of this week, I believe.
That's correct.
So congratulations. So I know we obviously, we can't talk about forward-looking statements because this is a podcast and that's totally fine. But I would love if you could share some of your high-level internal goals on your revenues, gross margins, EBITDA margins for the short and medium term. What's that looking like from your end?
Yeah. Yeah, it's an exciting journey ahead for us. And I mean, we haven't put any formal guidance in the market at this point, but we definitely have internal targets. And so it took us about 5 years to get to 150 million. And we really saw that as the hard part. And so in the near term, it was back in last September, we announced kind of our middle term and longer term targets. And so we expect to continue organic growth at around 25 to 30%. And if we continue that, we believe that in about 2 to 2.5 years, we will be seeing this business at around 250 million in revenue with an adjusted EBITDA at around 10%. But really the main focus for us and the main target is our 5-year target of 500 million in revenue with adjusted EBITDA levels at about 15 to 20%. And so these growth rates would have us growing at a slower rate than what we've been seeing at around 22 to 24%, which is a reduction of the average of our 5-year CAGR.
Okay, 22 to 24%. There's still very nice growth. Not gonna lie. You know what I mean? I'm still very satisfied with that as an investor. Also, the fact you mentioned that your margins are growing over time. I still remember, just a few years ago when it was, like lower single digit, right? Maybe 3 or 4% ish. And now your most recent quarter, I think 7-ish%, something like that, right? But
Yeah,
speaking of, let's talk about that. Let's talk about that quarter, some of the highlights, and yeah, because it was fantastic, and I think people need to hear about it.
well, no, absolutely. And thank you. And really, it's exactly that. We'll have to continue to perform and execute. And as long as the team continues to keep our head down and focus on that target, we do see it attainable. And so last quarter is a prime example. It was a great quarter for us. And really, one of the biggest highlights was just the continued momentum across the core business. Not only did we deliver record gross margins, they were up to about 37.6%, which really spoke to the strength of the model and how we're just scaling efficiently. But this quarter also marked the 10th consecutive quarter of us showing positive adjusted EBITDA, which increased to about 3.5 million or about 7.4% of revenue. Additionally, revenue also landed within our forecasted range to about 46.6 million, which is about a 32% year-over-year increase. And really, this performance was driven by a balance across not only new, but also returning customers. We were seeing about 95,000 new customers, which was a record for KITS. And it's just really exciting to see where this growth is coming from.
Incredible. Congratulations again on this quarter. I was listening live and I was very impressed. I want to talk about some other recent catalysts that were quite exciting and significant. And I think the average person looking at it may not realize necessarily how big it is. So some of it was around, new partnerships in the insurance space. I'm hoping you can elaborate on what that is and the significance of that.
Yeah, insurance is a really important part of our category. And so thank you for asking about it. Speaking a bit more broadly, but in the US, approximately about 40 to 45% of vision corrected customers use insurance. We don't have as much data in Canada, but it's a little bit higher at around 50% on average. And the coverage is a little lower than you would expect, probably around 3 to 400 and renews about every 2 years. And so when launching KITS, as I mentioned, we really just wanted to focus on making it easy for the customer. And so what we're hearing was this process for insurance was just so frustrating. These customers would come into a brick and mortar store, they'd have absolutely no idea what was covered. And it's a total leap of faith. All of a sudden, you need this coding, you need this, here's my credit card, costs $600. And really, you're just sitting there hoping that it'll get covered. And then all of a sudden, you're paying out of pocket, filling out a couple forms, and then waiting to get reimbursed. And so, aligning with our mission, our team really wanted to focus on those insurance partnerships. And so, Q2 2024, we launched a partnership with TELUS Health that covered direct billing for about 38 insurance companies across Canada. And what this was an API connection. So customers inevitably could just apply their benefits directly and have it reimbursed automatically during checkout. So there's no guesswork, there's no out of pocket, no paperwork, and there was no waiting for that on the customer side. Since then, we've had a couple more advancements. We added a few new partnerships in Canada, one being with NBC. And we also added our first iteration of an insurance API to US customers in early of this year. And so we'll continue to have more advancements on this side. But overall, the response has been fantastic from customers. Everyone's really enjoyed that process. And it's just continued to make it a little bit easier in any way that we possibly can for these customers.
Yeah, honestly, that is such a game changer. Like, I think again for myself, I'm an investor, but I look at myself as a customer too, right? Having something like that takes the anxiety out of buying something. I don't know how you feel about that, but for me, this is this is everything, right?
Well, it's exactly that. And it's the vulnerability that comes with eyewear as well. I mean, you get your eyes tested and all of a sudden you're wonky on this one, or you have astigmatism here, and it's a
Hmm.
very vulnerable experience to then sit there and not know what coverage is available, but then also be in a little bit of a mode where you're paying out of pocket, which many Canadians don't have the ability to do so. And so just before launching these partnerships, we did a study across Canada, and it was about 50% of customers had put off an eyewear purchase because of the cost. And so
Wow.
we really just wanted to come in there, and whether it's insurance partnerships or just the overall cost that proposition for customers, just making it a little bit easier.
No, that definitely differentiates the business a bit, which is a good segue for our next topic. I want to move on to competition. So this is again an investing podcast, and I know, my investing community, I know they will ask, okay, this business is great, but we care a lot about the concept of moat, right? And barriers to entry. So one thing that I'd love to hear from you is what is your view on other businesses in the same type of space that are maybe thinking of doubling down on the online business model? And just more broadly, how do you look at competition?
Yeah, definitely. Well, so in optical, there's just so many components to the story, as I mentioned, and you really have to invest in all of these to acquire customers. So there's quite a large barrier to entry. And really, we feel like this is like our competitive advantage. It's important to note that this category isn't just something that you can plug into a Shopify. It's not like selling t-shirts. It's a specialized category that requires scale and precision and automation. It needs a custom-built infrastructure, a front end to WMS, to add-ons, insurance, just a full data warehouse behind it. And so what we've really seen is there's been a wave of customers really moving online. It's, as mentioned, it's a $70 billion category. And pre-pandemic, there was about 6 to 8% of revenue online from eyeglasses purchases. And now it's about 18 to 20% of eyeglass purchases are coming online, and it's growing fast. Contact lenses is even more significant. And so about 17 to 18% of purchases of contact lenses were sold online pre-pandemic. And now it's just over 40% and growing rapidly. And so we're seeing this wave of customers that are moving online. And there's a couple of areas that it's really helping us. One, there's not that many pure play online competitors to absorb that share that's coming online quickly. And two, we happen to have a low cost infrastructure that we don't need these brick and mortar stores. And so when you walk into a store and buy a pair of glasses that are $200 or so, we can save that customer that. And it's really hard for a pure play brick and mortar retailer to pivot online. Inevitably, you're cannibalizing your business in a sense if you're selling glasses online for $50, but then your brick and mortar store is selling them for $500.
I see. So from my takeaway from everything you're saying, firstly, is you can beat almost everyone in that industry just on cost alone, at least anyone else who has a brick and mortar business. But then there's that other piece that if more people or more companies try to, build on the online business model, it's going to grow the total addressable market of customers online. And that growth of customers will more than make up for any potential extra competition. Is that the
Yeah,
takeaway?
exactly.
Yeah.
Yeah, exactly. Very well said. And really, I mean, there is a few good competitors out there. There's a company out of the US called Zenni, and they do a phenomenal job. And really, for us, as mentioned, it's just such a large category that we'd actually benefit for a few more competitors that would just tip the market online a bit quicker. And so there's definitely enough room across the industry for a few of us to be very successful in this. And so we're rallying behind everyone who's tipping the market towards the online.
Love it. Yeah, so you're ahead of that trend and you're benefiting from those macro changes. Another thing too, I guess that in my opinion, I think it helps build up that moat is these specialized services you have like KITS Plus. I don't know if you want to talk about that or the Autoship feature.
Yeah, no, they're a very fun part of our business. And really that aligns with a bit more of kind of our repeat customer base. And so we're continuing to invest a little bit more in just finding better ways to be able to have these offering for customers. And so Autoship initiative is really for the contact lens customers. It's something, the easiest way to think about is a set it and forget it. And so what we're hearing from contact customers is you inevitably have your contacts packet in your bathroom, you're putting them in every day. And then a couple days left and you realize, oh, I need to order a new pair of contacts. And fast forward, you go to work, you forget about it. And so we're hearing from customers that they were putting their old contacts in their eyes while we're waiting for their initial contacts delivery. And so we've eliminated that by the quick and fast shipping. But for those customers too, having to wait a day or so, we've been able to offer an auto ship. And so they set it, forget it, it hits the 90-day marker and their contact deliveries there waiting for them at their door. And then we were getting feedback on the KITS Plus side where customers were contact customers who also bought glasses. And we're hoping for similar innovation. We have stories and countless of them of people who have drawers for their KITS glasses and racks of them. And so we wanted to create a loyalty program that really offered more catering to those glasses customers. And so it's exclusive savings and rewards, but more of kind of a loyalty program that builds around that.
Love it. And that helps again that recurring revenue piece, which is why it's above 60% consistently. I actually went back and looked at the last, I don't know how many quarters, maybe like 15 quarters or something. And it was all above that 60%. And I was thinking there must be one where it didn't, it wasn't 60 and it was all above. So that's consistency, that's a big deal. Congrats again on that.
Well, no, thank you. And it's really the team around us that's supporting it. We have some great customers, and as mentioned, you just have to continue to do a great job for these customers, and then they'll come back. And so that's very much a focus for us.
Love that. Okay, another thing I wanted to ask is obviously, this is a fast growing company. It's not a super large mega cap yet. It's still fair. I don't know how many hundred, do you have 100 employees? A bit more, a bit less?
A little bit more. We have probably around 200 employees now,
Oh, okay. Oh,
split
actually
across.
growing. That's a lot
Yeah.
more already than a few years ago, right? But so when you have a company like this, you got to make sure that everyone kind of rows the boat in the same direction, and it's difficult at times of change. So I just wanted to ask, how do you ensure that everyone is aligned with the mission?
It's a great question. And the team at KITS is really the backbone of the business, whether it's the lab technicians or customer service or marketing, everyone plays their own role in the success and the growth of the business. And so when we're looking at individuals across the organization, there's really two key areas. That's important for the team to be able to see the impact that they're doing on a day-to-day basis and really align their objectives with the company, not only as a public company, but just as an individual group. And so focus on a couple of different elements. A good example would be using the Rockefeller method. So when you're looking at each quarter, the team across the board puts objectives in or their OKRs that they're striving for, as well as individual OKRs. And that really just ensures that there's alignment across the entire organization to keep focus on those key areas we're working on each quarter or each year. These are then highlighted in daily huddles. And so across the teams, we're meeting at different points in the morning to really discuss these key metrics that we're working towards and monitor the progress, but then really work together in accomplishing any challenges that the team may be working on. A great example, though, is about 2/3 of our employees are actually participants in our ESOP program. And
Wow.
so not only are these individuals just building a great organization out, but they really believe in the mission. And so, as you can imagine, we set really big goals for ourselves, but it's great to see the team really rallying around each other and overall just accomplishing this goal as a whole team and group.
Love it. And I mean, you are hitting those targets every time. You know, another thing too that comes with just being an investor for, let's say, more than 3 years in the business is every quarter I look, I see, okay, what's the guidance for the next quarter? And every time you guys do either you fit well within it or you're even more, or and I think the most recent one, you actually said, oh, we're revising our guidance upwards, which is amazing. You know, and I mean, great surprises. So yeah, you are definitely, very consistent. And I think, like you said, having so many employees that are part of this program as well, it helps keep everyone really excited to keep working hard and delivering these incredible targets.
Yeah, that's exactly it, though. It's a high pressure industry, as you can imagine. There's so many great consumer companies out there growing
Hmm.
and
Oh
there's
yeah.
competition all around. And so we've been very lucky to retain the top talent that we do across the organization.
Yeah. Okay. I want to ask you now, just for the investing community, what message would you like to share with them? All the retail investors who may be considering investing in kits after listening to this great episode. What would you like to say?
I mean, in short form, really, we just always recommend, similar to your experience, become a customer first. Try the products out, see what you think, and really just judge us on our performance of what we say we're going to do and if we continue to perform. It's easy to put out forecasts and targets and great ideas, but if you're not meeting those objectives, then that's really where the shortfall. And so our team just really aims to be a very boring, consistent business. You're expecting similar growth rates, similar recurring revenue, and just making it easy. And so try the products out. And if you have any questions, please reach out. Always happy to do a lab tour or sit down for a meeting with investors who are curious to learn more.
Boring and consistent is just what I like. Although honestly, I wouldn't call you guys boring. I think actually, I gotta say too, your social media game is very good. Like the Instagram page, it's crazy and it's growing real fast. I've seen it grow by so many thousands or tens of thousands of followers too over the years. How many
It
do you
is,
even have
it
now? I
is,
don't even know. Let
oh,
me check. It's a lot.
it's phenomenal what the team can do. I am unfortunately not as cool as many who on the influencer side, but
Oh.
we just have such a great team around us who specializes, for instance, in performance marketing for influencers. And
Mm.
so they know exactly questions to ask, buttons to push, really how to incentivize these partnerships. And so it's been really fun to see kind of the evolution of the business 6 years ago to now what it is today.
Yeah, I just checked. 80,000 followers already. That's wild. I'm sure next time we speak, it's
Almost
gonna
as
be a
many as
hundred.
you.
Yeah, yeah. Next time we speak, it's gonna be 100. Okay. Now just a fun question for you. What's your favorite kits design?
Oh, this is a fun one. Too many to decide. I'd probably go with our KITS pizzas. And so this was a bit of a fun launch or innovation, I should say, that the team moved forward with at the end of last year. Really, the easiest way to describe these glasses are they come with a set of KITS bits. And so think of a pair of Crocs with charms on them in a glasses form. And so it was a really fun launch that the team had. It was the product team looking at different ways to innovate in a very traditional industry and be a bit more creative. And so these fun charms, they have unique styles to them and just add a little bit of personality to your glasses. But really, the reason why it's the most fun for me is we then did customized bits to celebrate the core values that we have internally and milestones within the organization. And so every one of our team members has a pair of the Pixas, and it's just fun seeing the team walking around highlighting these key celebrations and accomplishments. So hopefully more to come on that side as it continues to evolve.
Nice. Can't wait to see more. Olivia Evans, thank you so much for everything you just mentioned. This was a great episode, lots of great insights, and I think our community will really enjoy learning more about KITS. Thank you.
No, thank you for having me. I appreciate it.
Absolutely. Next time we talk, we'll visit the lab in Vancouver. I have to make the
We're
trip.
we're looking forward to it.
Sounds good. Thank you so much. Today is May 13th. It is now approximately 2 hours after I recorded this conversation with Olivia. It is now just me by myself speaking. A couple of things I just wanted to highlight. Firstly, nothing we said in this episode is financial advice. I urge you not to make any purchases or sales based just on this episode alone. I'd encourage you, obviously, to do your research, read all the financial statements, consider your own financial targets and your own investing style. Secondly, I wanted to say a huge thank you to Olivia Evans. I am a fan of KITS, as you can tell. I found this company by myself years ago, decided to be a customer, then decided to invest, then decided to make it one of my largest positions because I really thought I was onto something. And I then reached out to the KITS team, and Olivia so graciously agreed to, schedule this chat with me. So, Olivia, if you're listening, thank you again so much. It was a great chat. Now, for everyone else listening, couple of key takeaways I wanted to share here after I got to digest this conversation. Firstly, if you dabble in small cap stocks, there's no way that you cannot be impressed. Small cap companies, in my opinion, they're notorious for not really delivering on their own targets. And I mean, I get it, they're small, growing, competing against bigger opponents. They promise the moon and they don't deliver very much. That's the default. Now, the stock of KITS has gone all over the place, and that is to be expected for a small cap stock. But what is not expected is a business that consistently outlines what they're going to do, and then they do it. Now, I invite you to look at literally the last 3 or 4 years of their earnings, their press releases. Look at what they say that their guidance is, and then look at what they deliver. They have shown that they are more reliable than maybe any other company their size, and more reliable even than most companies bigger than them as well. That's extremely rare. Trust me, and anyone who buys small cap companies, you know that this doesn't happen very often. And there's a reason I only own 2 companies that are less than $500 million in market cap. It's because they're usually not reliable. But KITS is different. And that is why Olivia was able to look me in the eye through the Zoom camera lens and say that their internal goal, not guidance, but goal, is to get to that 500 mil in 5 years. And I completely believe her because I have seen them achieve their goals over and over again. And I'll say that's an underrated thing about owning a company for more than, 1 or 2 years. When you see them for like 5 years, you can tell if they're serious or not. And these guys are serious. Now, $500 million in revenues in 5 years, if that's what we're looking at, it's not crazy or unusual for a business in that category to trade at 2 or even 3 times sales. So 500 million times 2 or 3, that would imply a market cap of $1 billion or more. Now, at the time of me recording this, we're trading at around 370 million or so. And my average cost is closer to whatever the price was when their market cap was, I think, around 250 or 270 million. So, I mean, if we can go from that to 1 billion or more, you can see why I'm quite excited. Now, of course, important to remember, my friends, look, I don't give advice, but if I had to give advice, I would take it straight from the great Warren Buffett, and I would say in a case like this, really Do not focus on the stock price. Focus on the intrinsic value. Focus on the business performance. Now, what excites me about their business performance, and we spoke a little bit about it on that podcast, was the recurring revenue segment, aka the reliable revenue. The fact that it's consistently at or above 60%, usually that supports a more premium valuation, or at least a more stable one. So that's nice. So yeah, my plan, as I have done for the last few years, is really focusing on their performance, watching their earnings, their revenue go up every quarter or every year. And my full expectation is if they continue to be as reliable as they have been, the stock will go all over the place, but over the long term, it's quite likely to go up. I plan to keep this as a core long-term position. And yeah, I'm really, really excited. And last thing, I'll end this podcast on this note, is there's a special place in my heart for companies that manage to be good for shareholders and for customers at the same time. It sounds like such an obvious thing, but it's actually really, really difficult thing to do. I literally cannot think of many companies like that. Another one that I've highlighted as like this, which you guys don't know I'm a big fan of, is EQ Bank. Amazing company. Again, very similar mindset. I also really like Québecor, though I don't own that one anymore. But Québecor, same thing through Freedom Mobile, low cost and great customer service, great for investor. I mean, yeah, that's just, really impressive when companies can do that. And so, yeah, shout out to KITS as a great Canadian company that is just net benefit to society, in my opinion. Love seeing that innovation, and I really support businesses like that. So yeah, my friends, as always, I hope you enjoyed this episode. Please feel free to give us 5 stars if you did. And I look forward to connecting